Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, July the 4th. The year's 2023. Let's talk trading. Bank holiday. Yes, in the U.S., it's the 4th of July. These videos are for educational purposes only. Your results may differ from mine. And if you do want to trade today, make sure your risk management is in place so you don't lose any more in any one particular trade than you are willing to lose. We'll run through the charts here. For the month, the pound is up 31 pips over the open, 5.6 off the high, and 61 off the low. And notice we are in the upper wick zone of the previous day's candle. We're also in the upper wick zone of the previous month. And we're in the upper wick zone of the previous week. All gaps have filled. Notice we've already taken out the weekly pivot. And we are near the top of the opening range, which was yesterday. For the year, 630 pips above the yearly open. 917 off the low and 128 off the high. And once again, we had an inside bar yesterday. We broke out at a high just by maybe a pip, it looks like. Almost two. And we are in the inside bar from 2 weeks ago. Notice we almost, actually, looks like we broke out of the low there by about 2.5 pips or so. So we're tested the inside bar low of the weekly and the inside bar high of the daily. So interesting area to be compressed in. As you can see, lots of inside bar action, especially on the daily. Only 4 pairs over 100 pips, pound clocking in at 43. So obviously nothing much happening on this bank holiday. But for you diehards, you can still make some pips. As you can see, the pound is sneaking up since the U.S. traders are not trading. It's a good day to push the pound up. The range is too low, so caution if you're looking for a rat reversal. We haven't hit the monthly pivot down here at 126.38. Bambino Flex says to go short. Near the pivot point, it says to go short. Near R1, it says to go short. And I think we're right at R1. It's kind of hard to see here. A couple things are on top of each other. We've taken out the daily, taken out the weekly as shown, but we haven't taken out the monthly yet. We're breaking through the upper wick zone of yesterday's candle across that high at 22.6. So crossing above the high, upper rat zone, and we are 8 pips above the highest open for the day, which was this hour. This is one of my favorite dashboard setups when I want to look at multiple pairs to see which if any pairs I want to trade. But as you know, since I've been trading with Walmart, we just trade the pound. But every now and then I can look at this screen and say, oh, something looks really ripe. So we've got a few pairs hitting their daily highs here. Here's Aussie hit theirs last hour, so look for a nice 1, 2, 3 trade, still up in the upper rat zone, and you can still do the holo. And looking at trading screens here, you see we put in a 3 ball, and we're coming back down. But on a couple of my newer indicators that I'm going to have to get out to you guys, people donated to state the bias direction and trade direction. What's the difference? In the trade direction, I'm using state train. Bias direction is pretty simple. It's just the candle color matching with the indicator 2, which is the EMA 5. And sometimes they're the same, sometimes they're not. So you can see here, trade direction isn't giving you a signal, but the bias is. And I like to combine that with some old school buzzer reversal thought. So for example here, we've got 3 coming down. If I had taken this flip-flop trade, I probably would be thinking about punching out. Why? Because here it's all green, so this is what might just be a pullback. And see here you had 1, 2, 3, 4, 5 in a row with that big one towards the end. So now we're getting a little pullback here. But I'd be looking to, there's 2 pips, be looking to take the pips off the table nice and quick. And there's a 1 ball. And for me, I usually like to exit when I see a 1 ball. Because more times than not, it'll reverse on me. So this is just trading with the 3-level CZ and just using the flip-flop boxes here, and also targeting the fib lines. So right there at the 21 from the 10 to the 23. That just reminds me, I should put my fib multimeter up there to show those. I'll have to do that since I have the fibs on here. Then you can know where it is on all the pairs. But the fib multimeter, if I remember correctly, doesn't work off of the 3 balls. It works off of the day. So where price is for the day. And a nice drop here. You can see indicator 2 still magenta. So if you can ride the dots, sometimes I like to wait and for the M5 to give me the signal, especially if I want to ride it longer. I don't like to oppose it. So you can see here on the multimeter, you've got magenta, but the rest are aqua. So I consider that a pullback until at least these 2 match. Going down to the 38. One ball's moved over. And if you notice, when price does reverse, a lot of times it'll stop right on that EMA 5 line or the dot there for indicator 2. And so you see we got the 38% retrace. On this screen, it's just looking at the highs and the lows. You can see we had a low here 10 bars ago. Price came down, failed to break it, reversed. That's why I have this screen set up with the last 10 highs and lows. You can see here on the M5 it broke through a previous high, but that acted as support and it bounced. So depending on what time frame you look at, you can tell different stories on what price is doing. And as some of you know, I like looking at M30, looking for candles to get covered. This one got covered. This one hasn't been covered. And simple price action, H1 at the line. And you can see here we've had last 4 hours over 10 pips. And here, on looking at the M30s, you can see we've had some pretty good M30 candles too. And you can see one of the reasons why I moved over to M30, because you get these reversals every now and then, and you don't lose out too much on the range. Meaning the M30 range sometimes isn't that far off the H1 range. The only difference is if you get 2 green or 2 red M30s in a row, but then you'll have a big H1 range. And then looking at the H4, you can see here we tried to break out of that high once again, but it's pulled back the previous day's high. We did break out of the previous H4 high, which is one of breaking out of the previous H4 high and low. We're trading the H4 wick zone. That's something I've been doing for about the past month or so. I've noticed I can get bigger pips if I'm patient, and I think we talked about patience in the past couple of weeks. You can rather than being glued to the screen and living and dying by every tick, you can put the trade on, put your stop loss on, in some cases put a TP on, and then once you're in profit you can start to move the stop loss up, which is what I've been doing. But one of the things to note about moving a stop loss is, once again, looking at these the indicator 2 is if you do that, you want to make sure you don't put your stop loss really close to the current indicator 2 dot, because you'll notice price likes to wick into that area. So fellow traders, if you're in the USA, hope you have a good 4th of July. Not my favorite holiday, in fact my least favorite holiday. And if you're not in the USA, hope you're having a good day. So when you're trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.